Welcome to today's video. Hopefully you're doing very well. Today's video is going to be an amazing one because I am going to cover one of the most important topics in trading, right? I'm sure you may have heard about it, and if you haven't heard about it, don't worry because I'm about to teach you everything that you need to know about liquidity. Now, firstly, let's start off with what is liquidity. Let's just give you a quick idea of what it is. Liquidity is simply resting orders. It's pools of money that are waiting to be gathered or filled before the market can get a continuation or a reversal. Now, hear me out. Liquidity typically rests below lows and above highs. So in trading, when you're looking at the charts and you see a low and you see a high, just know that there is liquidity resting below that low and there is also liquidity resting below that high. And if price wants to make a move, it needs to gather that liquidity, gather those resting orders, gather those pools of money before making those big moves. Now, when using liquidity, it's extremely important to understand that there are different types of liquidity, right? You have strong draws on liquidity and you have weak draws on liquidity. Now, in this video, I'm going to go through strong draws on liquidity. This is going to be extremely helpful. Take profit placements, especially when you are looking to take a trade and you want to target a certain area. If you are targeting a strong draw on liquidity, it's a high probability that price is going to go there because it wants to target that liquidity. Now, B, reversals. When we sweep out a key area or a strong draw on liquidity, it's a great indication or a great area for price to then give us a reversal. So that's why it can really help you out, because if you trade reversals like I do, all you have to do is wait for a sweep of a strong draw. Now, let's get right into it. Let's go through all the different draws on liquidity. Bang! So the first draw on liquidity is session highs slash lows. Now, what are session highs and what are session lows? Well, it's as simple as this, right? During the trading day, right? During the full day, we have different sessions. We have different trading sessions for the different regions. I'm pretty sure you may have heard we have London session, we have New York AM session, we have New York PM session, and we have the Asia session. Those are the 4 sessions that we get during the full day. Now hear me out. During these sessions, we typically always form a high and a low of the session. And for example, let's say it's the London session and we have the highest point that price reached during that session, we would call that a London high. That London high now becomes a strong draw on liquidity, meaning that the market wants to target that area. And if it does target that area, we could then potentially get a reversal from that area. Now, how do we identify these highs? How do we mark them out? And how do we use them? Let's get right into it. So if we look at the charts quickly, I actually have an indicator that tells me all of the session highs and lows, and it is called ICT Kill Zones Toolkit by Lux Algo. And I'm about to show you how this looks. Bang. Just like that, you can now see on the chart all of the session highs and lows. You can see we have Asian highs, we have Asian lows, we have London highs, we have London lows, AM highs, New York AM lows. Same thing for New York PM session. All these sessions generate highs and lows that we ideally want to see swept, or we can use as targets. Now, in this case, we can see a great example. We can see the market comes up, we sweep out Asian session highs. We then get this big reversal downwards. Where do we then target? We then target London lows. After we target London lows, we then get a big reversal and start pushing higher. Do we see how this is working? The market uses these session highs and lows as points of reversal and also as points where it can look to target. Now, this indicator, the way that you want to get this indicator is you are going to click on this button right here, and you are simply going to type in ICT kill zones. It's not going to be the first one. It should be the second one by Lux Algo. When you click on that, you should see this indicator right here. And just like that, bang, you can now see all of the session highs and lows. But yeah, let's move over onto the next form of liquidity. The next form of liquidity is equal highs slash lows. Now, this is a very simple concept. Whenever we have an equal high or an equal low, it's just when 2 lows are equal or 2 highs are equal. There's no other way to really explain it. Now, why is this a strong draw on liquidity? Well, quite simply, when we look at the market and we do generate an equal high or an equal low, which is quite common, it's not the most common thing, but it is quite common, it does appear, price typically tends to target that area. Think of it like a magnet. When we have an equal low, magnet, price wants to pull down, sweep out that low, gather those resting orders, then make that reversal and that continuation in the opposite direction. Now, let's go through some examples of how this works. If we look right here on the 5-minute time frame, looking at the Nasdaq, what can we see? Let's now get rid of the sessions. We can see market comes down and we seek to get a reversal from there. However, what have we taken out, right? Yes, we have taken out London lows, because if I use my session indicator, we can see that these are London lows. But what else? We can see that we have equal lows right here as well. If I zoom in and make this much clearer, what can we identify? What can we see? We can see that these lows right here are perfectly in line. Now, what does the market do? It comes down, sweeps them out, gathers those resting orders, those pools of money, and bang, we get that nice reversal. And then ultimately, we get this big push in the opposite direction. That is how this draw on liquidity works. Now, there's something really important about this, and it's, does the low or does the equal high, do the equal lows or do the equal highs have to be perfectly equal? As in, do they have to be equal to the exact point? Not necessarily. That's why we also have the term relatively equal highs and relatively equal lows. Now, for example, in this case, we can see that this low right here isn't equal. It's not at the exact same point. However, this is a relatively equal low because these are lows that are all quite close together. So this right here for me would be a strong area, which could potentially indicate a reversal if price heads to there. And that's why yesterday when price came down and we took out these lows, I actually managed to catch some really nice buys here because I knew that we had now swept a strong draw on liquidity. Let's move over onto the next part. The next part is news highs slash lows. These are also called data highs and data lows. And how do these work? Well, if you're a trader, you're pretty sure or you're pretty aware that there are high impact news events, right? There are red folder news events such as FOMC, NFP, PPI, CPI, all of these different types of high impact news events. When they do get released, what typically happens? We get a massive move in the market. We get a big candle, we usually get a big wick, and it's just a massive move, a injection of volatility into the market. Now, what does this do? Typically, that results in a low and a high of that candle. Now, that low and that high now becomes a strong draw on liquidity. That is called a data high or a data low. Now, whenever we do have a high impact news event, as I mentioned, like FOMC or CPI or anything like that, we are going to most likely get a big candle. So how can we use this? Well, we can use this in two different ways. If we get that big candle, that big wick at the top and that big wick at the bottom, we can now look for a potential reversal trade towards that low or that high because price wants to draw or price wants to target it because it's a strong draw on liquidity. It's a magnet. Now, how else can we use it? Now, if price comes down, let's say, and we sweep out that data low, we take out that wick, we can then potentially start to look for buys or look for a reversal from that area. As now, price has done what it's needed to do, which is gather those resting orders, gather those pools of money, and then ultimately give us a continuation in the opposite direction. That is how we can use this. Now, data highs and lows, news highs, lows, aren't the most common. It only occurs when we have a high impact news event. And to be fair, it is quite common. It's ultimately, we get a high impact news event pretty much 2 to 3, maybe 4 days a week, sometimes 5 if it's a crazy week. But yeah, when we do get these big candles, remember, they aren't just a big candle for no reason. You are now left with 2 amazing draws on liquidity that you can now use to your advantage and look to target. Let's move over onto the last and final draw on liquidity. We have low resistance and high resistance liquidity. You may have heard about this, you may have not, but I'm about to break it down so easily that you guys are going to be absolutely loving this. Now, what is high resistance and what is low resistance liquidity? And it's as simple as this. Low resistance liquidity is when we have a bunch of lows that are very close and tight together. Now, let me just show you an example right here. This is what we would call low resistance liquidity, right? We can see that on this trend upwards, we are forming lots of lows that are very, very close together, very consecutive. Now, what does that mean? Well, that means that, okay, we have low resistance liquidity, and ultimately that means market is most likely going to absolutely glide through it like butter. Now, on the flip side, what is high resistance liquidity? And it's the opposite. It's when we have a strong draw on liquidity, like here, that is not followed by multiple lows. This is now a high resistance low. What does this mean? This means that market, when it takes out this high resistance low, it's typically a really, really, really strong area of reversal because it's taken out such a strong draw on liquidity. Now let's look for some examples. If we head over to the 5-minute time frame, let's see if we can some low resistance and some high resistance liquidity examples on the NASDAQ. Bang, we've got a great example right here. If we look on the NASDAQ, we can see that here we have lots of consecutive lows. We have low, 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 low. And right here we have a low, followed by another low, followed by another low, followed by another low. All of these lows are very consecutive and very close together. Now, what can we see happens? We can see the market floods down and absolutely glides through all of this low resistance liquidity, because that is ultimately how low resistance liquidity works. Now, how can I use this to my advantage? Well, let's say I want to take a sell right here because my model has formed. Then guess what? I'm identifying that there is a lot of low resistance liquidity in the direction of my take profit. Now, this is going to make me very comfortable because, as you can see, I know that price is going to flood through these areas of liquidity because they are weak. They don't fight back. They are low resistance. Now, let's head over to the opposite. What is high resistance? And it's very, very obvious in certain cases because it's when we have a high or a low that's not surrounded by many others. Bang. Perfect example right here. This is a high resistance high, right? We can't see many consecutive highs or many consecutive lows following it right afterwards. So this now becomes a really strong draw on liquidity. Now let's see what happens moving forward. Let's see what happens to the market. Bang. Perfect example right here. We've come up, we've now swept out this high resistance low, and then we have gotten this massive reversal all of the way to the downside. Can we see this? We have gotten a massive reversal and we have now started to push all the way down. Let's see if we can identify another example. And honestly, we have another example right next to it, which is great because we have another high resistance high. What can we see happens? Market comes up. Hold on, let's mark it out clearer. What can we see? Market comes up. We sweep out this high by a pip, and bang, we get this big flood and big reversal in the opposite direction. That is how we use high resistance and low resistance liquidity. High resistance liquidity as areas to target and also areas for reversal, and then low resistance liquidity as areas in which we believe price is absolutely going to glide through and fly through just like butter. But yeah, those are the 4 types of liquidity that you want to be using in trading. I use all of these pretty much every single day. Whenever we see a strong draw on liquidity, we want to make the most of it because we know that the market wants to go there. And we also know that the market wants to give us a good reaction from there. So we can use this to our advantage. And that's what I do almost every single day, allowing me to catch some absolutely beautiful moves in the market. Now, hopefully you've been paying attention. Hopefully you've now got that session high and low indicator on your chart, because trust me, it's going to make a huge difference, as is all of the different types of liquidity that we've just been through. But yeah, hopefully this video helps. Hopefully you've now mastered liquidity. You know all of the different types of draws on liquidity. You know how to identify them. You know how to use them. And just like that, you should see a massive improvement in your trading. Anyways, thank you guys for watching the video. If you're not yet subscribed, please drop a subscription. Also, drop a like and drop me a comment. What did you think of the video? Did it help you out with your trading? Do you now understand the different types of liquidity? And also, if you have any questions, drop a comment. I'm here to answer anything. But once again, I appreciate you all watching the video. I will catch you in the next one. Peace.